Hello, welcome back. Mike from Canavan Wealth here, doing Mike Reads the Journal on February 28th, end of the month here, 2023. Not feeling too well. You probably hear it in my voice. Let's jump into it. S&P 500 is down about a half percent. Yeah, about 0.45 for the week. This is kind of the third week of declines. If you look over the month of February, it had a really good start. So we're down about a little less than a percent. So I call that largely flat, down a little bit. We had such a great January. Year to date, still up 3.7. So, we've definitely calmed down. I think, to be perfectly honest, I think we're going to continue to slide here for a couple more weeks until we get um, next month's inflation numbers, and then I think we might slide a little more. I think we might finish even come the end of March, and that's just my guess. Obviously, I have no insight whatsoever into the large trend. We're going to get to that kind of in Article 3. All right, first article. This was really promising to see. One of the books I've recently read, I talked a lot about it on the channel, Good Economics for Hard Times. One of the authors is from India, does a lot of discussion, and there's been a lot of economic research into India. But India has been for a long time kind of hoping to be a big growth for, like, the entire world has been hoping that India would kind of emerge as a major contributor to the global economy. It's an extremely large company or large country. It is about to surpass China in population. And it looks like they're starting to get on the move, right? For the last 20 years, it really hasn't materialized, despite the fact that that's been a lot of folks' hope. So this article just goes through and shows, how well India has been doing from an economic standpoint. You see that right here, the size. This is the size of economic growth. So this was like China in 2000 compared to 2022. So kind of a big change. In India, you see obviously not as big a change, but fairly dramatic, right? If this is about half the size, you double it. In comparison, it's done pretty well. And whereas you see, like, a lot of these other economies have been shrinking compared, not necessarily shrinking, because it's the size of economy relative to the U.S., so it doesn't necessarily mean they're shrinking. But one of the big things there is, again, is demographics. As I said, they're about to bypass China, but they're also a younger workforce, whereas China is an older workforce. So that's a big deal to have, kind of a big, good, strong labor force that is not necessarily supporting kind of a top-heavy population. They really attributed a lot of it to infrastructure improvements over the last, 5 to 10 years. There's some statistics in here somewhere. Yeah, right here. 2014, 2019, highway kilometers increased by 45%. That's a massive increase. It's kind of like us back after World War II. Rural roads up by 85%, electric plant capacity up 66%. So India is very much still, parts of it are still developing substantially, and then other parts are very, very modern. So it's a very diverse country, and the more of it that gets kind of brought up to speed, the more this is really going to do. So kind of eyes looking on India. This has been a story about international stocks that has changed. Oh, that's a great ad for us. So the kind of world economy in general has been doing very well. So this is another kind of example of, just because the rules in the last 10 years seem so concrete now, doesn't mean those are going to be the rules for the next 10 years. So international stock really has struggled since 2008. The global financial crisis hit the world like a truck. And despite what the media may want you to believe, the U.S. came out of the global financial crisis, in my opinion, smelling like a rose. We outperformed just about everyone except China. China is now seeing, their own problems now, so I'm not too worried about them. But so India doing very well. This is about recent legislation that is encouraging semiconductors companies to build facilities in the U.S. that produce high-end chips. There's a Taiwan company, Samsung and Intel are kind of the three that they talk about here. It's talking about kind of all the strings attached that are coming with the substantial grants from the U.S. government in order to build those chips here. The simple ones are like they're required to they're not specifically required to hire union workers, but there's some legislation in there that kind of encourages them to hire union workers and provide childcare for their workers. And then if the plants themselves are overly profitable, they have to actually effectively profit share with the U.S. government. Um, and they're limiting the companies on stock buybacks so that they don't take this money and then just use it to buy their stock back, which of course drives the price up. So, but then the biggest one is that they're effectively not allowed to work with China in any major way in order to supply the chips to China, which the companies are balking at because obviously China is a big buyer. But with the geopolitical situation that's going on, China and Russia and Ukraine war and everything in Taiwan, um, it's a very touchy situation. So, if you didn't hear about this in the news, this legislation was relatively bipartisan. Obviously, the parties, I'm sure, fought like cats and dogs, but it was passed, and it's a big it's a big deal for semiconductor production in the world that is behind anyways. It's probably even bigger deal for the US. So um, I'm very, very glad to see the US government incentivizing semiconductor production to be done here in the US where we can have a pretty good control over it. I do worry about kind of these regulations. They never seem to work out the way they want them to. However, you know, my hopes are high that this will work out well. So it talked about, I kind of expect this kind of recent little, decline. I think we're gonna be down another percent, maybe two in a month or so, because inflation, at least from a PCE numbers, personal consumption expenditures, which is a little different than consumer price index, which we usually talk about, has kind of steadied out. These numbers are old. These are January numbers. This article I think came out on Friday. Yeah, it came out on Friday. Markets were down on Friday because of this. Kind of steadied out. So you can see core. This is core, so it doesn't include price of gas. Slow decline. A lot of people might call that flat as well. This has got fuel in it, so not no surprise that it's been coming down because the price of gas has been down. But the other side of that story, so even though inflation is up, consumer spending up 1.8% in January, highest in nearly 2 years. So it's this story of inflation is sticky and yet consumers are still spending, which adds to that inflation. So both of those are bad news for interest rates. Most likely, interest rates will either stay high for longer than expected, or they will continue to raise them. And that in the near term, February, kind of February, March, April, May, may not be great for the stock market. But it's not that I think it's going to, we're going to go back and retest lows or anything, because if you remember back a couple weeks ago, we talked about kind of soft landing versus hard landing versus possibly no landing, right? There's a very good chance that we'll go through this and really not enter any type of a major recession. So we'll just have to see. That's about it. I hope everyone got something out of this, and I will talk to you soon. Thank you.